Everybody, welcome to the morning market briefing, Monday, May 16th, 2022. Hope you're doing well. Hope you had a good weekend. Should be an interesting week. I feel like lots kind of going on. Market trying to figure out where it wants to go. Right now, Dow futures are up 2 basis points. S&P futures up 16 basis points. S&P down 16 basis points. NASDAQ futures down 34. So a little bit of back and forth across the major benchmarks. Jumping in, Ben, let's talk we got some good commentary over the course of the weekend on state of the market, some good context. What really stood out to you, as you were listening to some of this commentary?
Yeah. So the big one was that I think a lot of people have heard about is Lloyd Blankfein, the old CEO of Goldman Sachs. He was on CBS's Face the Nation. He said that, quote, "If I were running a big company, I would be very prepared for a recession. If I was a consumer, I'd be prepared for it." He says it's not baked into the cake and there's a narrow path to avoid it, but it's a very, very high risk. And I'd agree with that. You are seeing consumer spending beginning to slow. In April, car spending was up 24% over 2019 levels. That sounds really good, but then you got to divide that by 3, basically. So you're talking 7-8% on an annualized basis. We grew very quickly in 2020 and 2021. And so 2022 is a little bit slower. And now we have big time inflation. So once you strip that out, you're probably you're running a little bit negative in terms of real consumer spending actually on a year-over-year basis. Goldman thinks it will still grow 2.5% in Q2, but this assumes that imports fall 7%. So the way the calculation works for GDP is that imports, if they fall, that's actually helps GDP because we're exporting more on a net basis. So that helps our current account surplus. Finally, the ISM reading may actually be inflated due to inflation. So when companies are actually surveyed, how is your business doing? Do you expect sales to be up in 6 months? They'll generally be saying yes, but a lot of that's due simply to prices. In terms of actually the amount of stuff that they're selling, it actually is not nearly so good. So I wouldn't be surprised to see another negative GDP print in Q2 following the GDP print in Q1. Obviously, that's out of consensus at the moment. Consensus is in that 2% range. But I think right now, given where consumer spending is coming in, I wouldn't be surprised to see if we post another negative GDP quarter.
Tom, as we try to kind of digest where we are, I feel like a common question is, I think we're getting more and more comfortable, I guess is the word, or used to the fact that, hey, this is probably a recession. As you kind of view where we are and what that means for the market, we say over and over, the market is not the economy, but as you try to figure out where the market's going, how are you kind of wrapping your head around all this?
It definitely is becoming more and more apparent to me that I think the soft landing is kind of off the table. I think at the very best case scenario, we'll have a bumpy landing, but I think we're probably cruising for a hard landing with the way the Fed's going. I think one thing that's interesting is this morning, kind of giving you an idea of where the bond market is. We've seen a little bit of strength there over the last week or so. And then this morning, AT&T came out and announced they were going to buy back $8 billion worth of their debt. And they're specifically targeting the highest coupon issues they've had that are non-callable. So basically like stuff that's got like 8-9% coupons from way back in the day. They're basically saying, hey, these things have gotten crushed. The prices have come way, way down. Let's offer, people, an extra point on their bonds and just say, hey, let us take these off the table completely. And I think that's twofold, which is one, they're saying, the bond market's probably oversold. We can get these back at a deal and clean up our balance sheets, which helps them should we go into a recession. And the other piece is they're thinking, hey, we need to clean up the balance sheets because we're potentially going into a recession. And I think that's smart balance sheet management. I think there should be other companies that are coming out of the woodwork to do that as well. If you can take advantage of low rates for issuance, and have low coupons and kick those cans way down the road, then when high rates come around, you should be jumping in and taking debt off the table because it will have sold off and the prices have come out quite a bit. And you can effectively use that cash again in the opposite way. And so I think that's a smart move, but I think that's kind of a read through as what companies are thinking. And to Blankfein's point, if I was running a big company, I would be preparing for a recession. I think that's what AT&T is doing. And I think that's a clear read through.
Yeah, it's the first time in a while we've actually been impressed with something AT&T has done with their balance sheet.
Yeah. Other than selling stinky CNN Plus to to Discover or whatever that deal was that just ate big time.
Yeah, they moved some real messy assets off the books, which was impressive. Ben, how do you kind of view the current state of the market, where we are, where we could go?
We definitely see some risks being taken off the table, but we haven't seen that capitulation. So I think that most people understand that a lot of times you want to see a capitulation in terms of a bear market in order to actually signify the bottom, and we haven't seen that yet. We did have a nice relief rally on Friday, and it doesn't seem like we're dropping really significantly from that, which is an encouraging sign here early, but there still remains a long week ahead of us. But in terms of some of the statistics that we're seeing, first of all, for context, my base case is that this is going to be a cyclical recession in the context of a secular bull market. From 1980 to 2000, we actually had 2 recessions, and that was a very strong bull market. And in 1950 to 1966, we also had 3 recessions, and that was a very strong market as well. So I would expect that this would be something similar. So we might have a cyclical downturn, but I think that the secular trend is still very much in place, which is encouraging because pullbacks and market crashes in those cyclical pullbacks in a secular bull market, they tend to be a little bit more robust. You're probably down about 20%, 25% versus down. If it was a secular bear market, probably down closer to 40%. But some of the reasons, the things that we're watching and why we don't think this is yet capitulation, we do see elevated cash levels. We do see negative expectations on growth and profits, but people aren't really taking action on that yet. People are still overweight equities. Historically, they actually underallocate equities to the tune of 20 to 30% in a capitulation. And we're not really seeing any flows out of the equity market. In fact, we've actually seen for every $100 of inflows over the past few weeks, we've just seen $4 in redemptions. Usually you see more than $50 in redemptions. So we haven't seen the big flush out of a lot of funds yet. And I think that we're going to have to see that in order to have that really capitulation where we can put a stamp on it and say, okay, I think that was it.
Yeah. And I wonder too, I mean, we've talked a lot about the 401k model here. I mean, it's in some regards, I wonder how much of the net positive on the inflows is just the fact that people are getting paid every week, every 2 weeks, every month, and money's just going into equity funds, whether they realize it or not. I mean, I think even talking with some of our clients, they're very quick to, put their eyes on asset allocation, look at performance on stuff that we're managing. But if they have a 401k that's outside of that, a lot of times that thing's just running. And so, it'll be interesting to see when you start to see some of that rebalance. We haven't had a ton of people coming to us wanting to really reallocate the 401k side. So perhaps that'll be something kind of on an anecdotal level to keep an eye on. McDonald's exiting Russia after 30 years of operation in the country. They're going to sell the business to a local buyer. It'll be a write down. Is this a huge impact to the company?
I don't think it's a big impact to the company. I think it's probably it's obviously a $1.2 to $1.4 billion loss that McDonald's is going to be taking on this. The local buyer is probably going to make a nice deal, but it's not going to have the McDonald's name on it. So how good of a deal is it going to be? I think it's just kind of a bad deal all around. But that's what happens. It's a war.
Biden's supposed to announce steps to address the shortage of entry-level homes coming out shortly. They're going to expand federally backed financing. They're going to direct some grants to encourage construction. Fannie Mae may consider purchasing loans made to builders prior to construction for multifamily housing. They're trying kind of all these little things to try to get this going. I mean, I have a hard time seeing how any of these steps are really going to have a major impact. I mean, I think it's probably going to score them some political points. But when we look at the housing market as a whole, there's only so much they can control, because ultimately what they need is inventory, and ultimately what they need is more homes. And I just don't know how they can force that, if that makes sense.
Yeah, I think it's more of an election ploy than a actual supply ploy. I mean, they're exploring test pilots to boost financing for tiny homes. These are the 200 square foot, 100 square foot of homes that people have been building a little bit more. So they're trying to boost financing for that. and they're looking to purchase loans made to build this private construction multifamily housing. If you are the administration right now, you need to raise money, and a lot of apartment landlords, they're performing very well right now, and they're making a lot of money. And so if you give them a little a cheaper loan to build a new apartment complex, you might get a little bit more of a donation come November.
JetBlue announces a tender offer for Spirit Airlines worth $3.3 billion. Two, I guess, second-rate airlines making moves. It's an interesting time to be doing this, in my opinion. I mean, I just feel like I don't know why you make this air grab, not a land grab, air grab, at this point in the cycle when we're already seeing some concerns about bookings. Obviously, these are lower cost providers. Maybe they're trying to capitalize on that, again, as much market share as possible. Tom, you're kind of the resident airline expert. What's your take?
I think it's a bad move. I mean, we've said it a lot on this call, probably not so much recently, but there are basically two kinds of airlines, those that have gone bankrupt and those that will. And throughout history, pretty much every airline that's ever existed has gone bankrupt, except for the ones that haven't yet. And I think this is a great move for JetBlue and Spirit to go bankrupt. The ones we look a lot at Southwest Airlines, and the reason they do so well is because they basically say, hey, we're going to operate in a certain way. We're going to operate cheap in certain hubs. We're going to do domestic flights. They're not trying to be Delta, but every once in a while, you have a JetBlue or you have a Spirit that decides they're going to join forces. They're going to take on the big dogs, and they ultimately go bankrupt. And given the way things are slowing down, given the way everything's kind of gone, I think this is a bad move. I think if they don't go bankrupt, they're going to languish for a long time in mediocrity. And when the next big wave comes, they could go the way of Alaska Air or some of those smaller airlines that did not do very well in the pandemic. And I just don't think it's a good move.
Interesting week. We've got a little bit lighter flow in terms of earnings. Ben, who are you looking forward to hearing from?
Yeah, so the retailers finish a month later, so we're going to start to see a lot of that retail noise coming out. Tomorrow morning, we have Home Depot and Walmart. That's going to be, Home Depot is one of the top 20 companies in the S&P 500, so that's going to be a big report. Obviously, Walmart as well. Wednesday morning, you got Lowe's, Target, ADI, Analog Devices. See how the semiconductor industry is doing. And then in the evening on Wednesday, we have Cisco with the networking company. Friday morning, we have John Deere reporting earnings. They've done fairly well. It'll be interesting to see how farmers are using these high crop prices to manage their business. Are they looking to reinvest in their farm, buy new machinery, or are they looking to retrench because fertilizer prices are so high? So that's going to be something I'm going to be watching.
Tom, we're going to hear from Bullard and Powell tomorrow. What are you expecting with those comments?
Man, I think Bullard's going to come out hot, saying we need to raise a full point. I think there's been some developments over the last really 48 hours that are probably going to continue to push inflation pressures higher. India putting the kibosh on exports of wheat, I don't think is very positive. And so I think he's going to address that. I think he's going to say, hey, we said that a 3-notch rate hike was off the table, but he's like, we should probably do 4. That's what I think is going to come from Bullard. And then I think Powell is going to walk it back. He's going to acknowledge that, things have changed. There's potential for higher inflation pressures, but they're sticking to the script. And I think that's the way it goes. But I do expect quite a bit of volatility off the back of both of those comments. I think it's possible that Bullard could really cause some damage, right before the market opens tomorrow. And then Powell, in his inability to address the credibility issue with the Fed by saying, oh, no, it's totally cool, man. We're just going to do 2 hikes. It's probably going to exacerbate things, if I had to guess.
All right, we'll wrap it up there. Market turned green on a futures basis while we were talking, so we'll do our best to kind of lift it up. Dow futures up 18, S&P up 9, NASDAQ up 8. We will be back tomorrow morning and hope you guys have a great Monday.